All right, so risk of oil and gas investments, and this is kind of the main point of doing this presentation, is to try to pass along to the investor what to look for. So when you're looking at, I basically broke this down into 6 categories. There's obviously commodity price risk to any oil and gas investment, whether it's a natural gas deal or an oil deal. There's capital risk, there's sponsor risk, there's operator risk, deal structure risk, and political and regulatory risk. Since I don't have a lot of time, I will be spending most of my time on the sponsor risk, the operator risk, and the deal structure risk. All right, so when you're looking at key components of developing an accurate oil and gas financial model, you're going to be looking primarily at what's called estimated oil recovery. How much oil can you extract? Right, so that is a discipline done by reservoir engineers, and it is really estimating how much oil and gas you're going to bring up out of the ground. So that is a huge, when you're plugging something into a financial model, that is a huge determiner of how well this asset is going to perform. And that is a very technical process that is primarily done by reservoir engineers in the business. Obviously, the commodity prices are going to have a big effect on your performance of the wells or performance of your investment. Capital expenditures, so how much does it cost to drill a well, right? So if you estimate that it's going to cost $4 million to drill a well, and you plug that into your model, and it costs you $5 million to drill your well, that is going to be a negative effect on your returns. If you drill it for less than $4 million, that is going to be a positive effect on your returns. So after you drill a well, operating expenses and water disposal are also critical to understand. So once you have the well in place, every well that you drill always produces water in the oil and gas industry. So how you dispose of that water, how much it's going to cost you to dispose of that water, and how much you are estimating that the well will produce in water is critical to the performance of your investment. So again, you need to understand where those costs are going to come in. And then after that, on top of the water disposal, it's also how much does it cost to operate the well. And again, you need to have experience in the area. You need to have data from other operators, other wells. If you're estimating that it's going to cost you $20,000 or $15,000 a month to operate your well, and it turns out, just in water disposal alone, it's $30,000 a month, it's going to affect in a significant way the returns on your funds. So the last part is number 5 is the fees and the promotes and the carry. So it's obviously very critical in any type of private placement deal that you understand, how the deal is being promoted, specifically in oil and gas. So you want to understand what you're investing in, how much there is in upfront fees, and are there what we call carries or sharing in the revenue. So those are obviously critical to understand as well. And so those 5 inputs are going to affect your break even, your payback period, and your return on investment. So again, those are some of the critical things to understand when you're looking at oil and gas investments.